Vaughn, what up? It's your boy E, but not only boxing, bringing that toe-to-toe value that's undisputed in any industry. Well, you guys read the title, and it's my pleasure to try to give you all a brief explanation of how technical analysis works, how important it is to observe before you take a trade or get into any kind of investment. I don't know what to classify this as. It's a beginner's tutorial or more of an advanced tutorial, but I'm gonna try my best to quantify this information to make it as simple as possible to understand, so that you can apply it to your trading or your investment journey. It's because all of these candles, man, it's really the same thing. They all follow a law. All of these candles, they follow a code, man. It's a code, okay? So, of course, I'm following a 5-minute chart of MU. This is a live market environment. You can see the level 2 there. You see the orders going in. I want you all to think that this is, some kind of fake nonsense or whatnot, right? So, what you must understand when it comes to technical analysis is that you always want to key in on key areas of support and resistance, okay? So I'm observing. I said this was a 5-minute chart, excuse me. This is actually a 15-minute chart, okay? So you can't understand technical analysis, okay, without understanding market cycle, key areas of support and resistance, and also you want to know where whole numbers are, okay, round numbers, or however you want to call them, okay. So the reason why I have this 15-minute chart up here is because it gives more information, okay. So we can actually go back in time and see where previous areas of key support and resistance were. We can also come up here, right? I can change it to an hourly chart. This is an hourly representation of key areas of support and resistance. So what do I mean when I say hourly, right? Well, it just simply means that each candle you see here on the chart just represents a what? An hour of time, okay? And I mean, I could get into this thing real deep, man. I can get into it real heavy, but this is not the video about psychology. It's not about risk management. Even though those are the two most important things that you must understand before you take any risk in the market. You must understand how you're going to manage your risk. You must have some sort of plan. You have to have a guide to go by, right? It's because when you get into this space, when you get into this market space, right, where there's real money on the table, okay? None of this is fake, by the way. This is all real money, okay? I retail trade, but I'm also putting myself in a position to prop trade, okay? I'm in a position now where I'm trying to become a professional trader. It's because quite simply that's what I want to do, okay? But I also have money in a live market as well. But I mean, that's neither here nor there. I really want you guys to understand that this is not coming from no idiot. This is not coming from no stupid YouTuber that's just putting a bunch of trash together. This is coming from somebody who's paid the price, man. I paid my dues to experience this, and I want you to do the same thing, okay? So when you look at this hourly chart, you see, what do you see here? You see gaps, right? You see this. Do you see this gap here? Right? Excuse me. Let me just get my mouse in the area here. You have to excuse me too. I'm doing this a little janky, but I want you guys to really understand it. You see all this gap, this gap of free space, right? It's also known as a window. Some market participants will consider this as a window, right? And all windows that are open, the market likes to close them. That's just the way the system operates, okay? That's the structure of this system, all right? And these candlesticks represent the inputs, all right, and outputs represent, what you're able to generate, right? Are you able to generate any funds? Are you able to follow your plans? Are you able to follow where the key areas of support and resistance are located? Okay, so the reason I'm pulling up this 15-minute chart here is because, as you can see here, during this live market environment, okay, you have the stock opened at the open, and you had a big drop, all right? So what happened with this big drop is that not only did it crash through this area of support, right? This 20 period moving average, crash through this 8 period moving average, right? The price tried to bounce, right? They had some foolish buyers in here that thought it was a good idea to buy. And what is that, a whole number? Yeah. They tried to buy it there at that whole number, again, an area of support. It's a whole number or a round number, okay? So people tried to buy it at 87, not being aware that there's what above it? There's a lot of overhead. What's the overhead in this situation? Well, you got this big red candle here. That's your first signal. That's big overhead selling, okay? So that big red candle is wiping out all of this advancement that MU was able to make yesterday. This MU on the 15-minute chart, all right? So I want you to understand something here, right? The buyers here at 87, they say, okay, I'm just going to buy here at this whole number, and I'm going to just see what happens, right? Well, that's a reason behind that. It's because whole numbers or round numbers, right, represent an area of what? Of support. So they tried to buy here. You see this green candle appearing. But guess what? Guess what it smacked right into? It smacked into resistance. Smacked into the resistance of this overhead. All this selling pressure right here. Sold off for a reason, right? And then, they tried to buy here. And then not knowing, unbeknown to the buyers who probably weren't even aware that this moving average, this 8 period moving average of resistance was right there. Guess what they did? They brought right into resistance. And it's just like on Willy Wonka and the Chocolate Factory, when Charlie and his grandfather, sipped the fizzy drinks, right? And he started to float up. And then what happened when they got to the top, right? They began to burp and they began to descend, right? And it's because, the fans were up there, it was dangerous. So you can just view these lines as the fans, right? These areas of resistance as the fans, right? And then they had to burp themselves down to come down back to safety, right? Well, where's that safety? Right here at this prior pivot. These are called pivots. This is known as an area of support. Why? Because chances is, without me even looking, I'm quite sure if I was to go back in time, this space here, well, this is the only area. Right? I want you to understand something on this one. This is for all my quantum mechanics and my physics people out there. Okay, this is where space and time, you can actually relate to it. You can actually become one with space and time. This is a perfect measuring tool for space and time, okay? It's because space and time in reality doesn't really exist. It's only a concept of our consciousness, okay? That's free game for you. But anyway, here in the marketplace, it's a great area. It's because they have a lot of people that will view this area as an area that where there's a lot of what's called buying power or support, okay? So these wicks at the bottom indicate that there was a lot of buying power there, but there had to be a reason. So when you go back in time, what do you see right here? All right. Well, let's go back in time further, okay? Excuse me. Let's go back. Let's do this. Let's go on a daily chart. All right. See that? This is the area of key support right here, right? So the buyers tried to buy, okay? They tried to buy here. I don't know why they tried to buy here. I'm assuming, it's a whole number there, right? They tried to buy there at the whole number. But again, unbeknownst to them, they weren't aware of all of this resistance. Again, this is the 20 period moving average, this line, okay? All it is just the average of 20 of these candles together pretty much creates this slope, creates this line, okay? And that line represents key areas of support and resistance. And you see it all over the chart, okay? So here you go. You got a pivot here, right? You have a low here. You have a higher low here, right? You have a higher high here, right? And I want you guys to understand something on this one, okay? It's because, okay, this is a good example here, okay? So Buying power came in here, right? This is a new area of support right here. Chances is it's because it's just no area here that represents it when you go back in time, right? That area, I'm quite sure, had to be a what? A whole number of support. So that's when they started to buy at support, okay? All right? So in the trading world, we would target these areas of resistance, right? That will allow us to come up with a plan, right? A risk management plan, right? That will allow us to buy what we're willing to risk. And if we have a good, let's say 3-to-1, if you buy one and to get three, how many of you all out there would be willing to risk $1 to make three? I would. How many of y'all would be willing to risk $100 to make three? I would. How many of y'all were willing to risk $1,000 to make 3,000? You know, you already know the answer to that question. But we have targets. So the targets that we see, the targets that we will be observing are previous pivots, right? Because these are considered areas of resistance. These moving averages are considered areas of resistance. And then once the price gets there, once it gets to our target, then, you know, we'll sell. Let's say if we buy one, right, to make three, we'll sell two, right? And then guess what? We just removed our risk out of the market. So anything that the price does from this point on, once it gets up here to resistance, right? Whatever the price does, we'll let it do, okay? So if the price comes back down, let's say if it hit this area of resistance, right? Or it hit this overhead, bumped its head and came falling down, we will get out with our profits, right? We had 2 profits to 1 risk unit, right? We got 2, we giving up that 1, so we're up 2. You see what I'm saying? So if we're up 2, right, we made money, right? And we didn't lose what we risked. That's the key here. That's what I want you guys to understand, all right? So as you guys can see here, it would have been very, very wise to hold on to it. It's because the price didn't give us any indication that it was going to come down. The price did not break this previous pivot. It did not break this low, okay? If it would have broken this low, this area of support where you guys got it, chances is the stock would have done this and came all the way back down here. And then the next area of support would have been this area right here, okay? So the bears, right, the sellers who shorted this, if that was to break, they'll be looking at this area of support here, all right? To begin buying again, or to cover their positions, right? To make their profit. That would be their target, in other words. But the bulls won this battle is because once it broke through this area of resistance, okay, once it broke through the periods, the 20 period moving average and the 8 period moving average, found support, right, where it used to be resistance, okay, then the price took off and it broke above this prior high right there. So that would have been a perfect logical place to buy. But of course, knowing you probably would have gotten stopped out, or you probably, if you're a long-term investor, you probably would have, felt comfortable buying here. And if the price was to break this, then you'll give it up. So how does this apply in the cryptocurrency market? You got a simple understanding of support and resistance, right? You have a simple understanding of how pivots operate. So this here is considered a pivot, right? It's because the price made a higher high here, broke above this high, right? Broke above that. It formed a pivot, came up here, right? It made a new high, okay? It made a higher low right there, all right? So that's an area that we can consider to be a short-term area of support. So once the price broke over this high, what common sense should tell you that the price is about to go higher is because the price was able to break through what? Through resistance, okay? So for all you trolls out there that's been keeping up with me, yes, support and resistance is key for technical analysis. It's because obviously I'm giving you the technique and how you will be able to analyze what's going on in the past history of this particular stock. Okay, so that's very important. I wanted to give you guys that game and let you know that. So here we go. So basically, areas of support and resistance are areas where the buyers are looking to buy and the sellers are looking to sell. Okay, so how does this apply to the cryptocurrency space? Well, allow me to explain. Let's go down here. All right. So XRP. All right, I'm not advising anybody to go out and buy XRP, but XRP right now in this live market environment is now trading at $1.56. Okay, as you can see here, the candles look the same, don't they? All right. So, in order to apply this knowledge, right, to your cryptocurrency understanding of what technical analysis is and how it works. Now, I don't have the moving averages here, so the only basis that I have as far as technical analysis is concerned is what? Areas of support, these prior pivots, and areas of resistance, these prior highs, right? Okay, so the stock was downtrending here. It's because they made a series of, it failed to make a new high here. Well, it did make a new high. When a price tried to break above, it failed to make a new high, and then it made a new what? It made a new low. It's because it broke this area of support. It broke this candle's low. So that's telling you that the trend has finally ended. This market cycle is turning, right? The sellers are in. People are probably selling their positions here. What did XRP get up to? It almost got to the whole number at $2, right? That's an area of resistance. So that's where the sellers were interested. The traders of XRP were interested to see if the price was going to get up here to $2. It barely did. The foolish people, the dumb money, the foolish traders, these people that don't know what they're doing, they just want to hop in. They think that XRP is the time to buy XRP that's about to blow up to the moon and go sky high right here. Well, guess what? They got trapped right inside of this candle right here. And then all of this fear came into place, right? So, of course, where the XRP find its support from this technical analysis, it found the support right there at the dollar mark, okay? So it would be wise to buy here at the break of this high, right? The break of this high is because, look, the stock made, a series of lower highs, right? And lower lows, okay? Lower high, lower low. Failure to make a new low, right? The stock was supposed to turn right here, and that would have confirmed the downtrend had the price would have broken the what? The dollar mark, right? The key area of support. This area right here, for all you XRP people out here, these Ripple traders and whatnot, that's the key area of support for you here, right? So in case this happens, right, you have now a confirmed uptrend, right? So if you were to buy above this candle's previous high, and you're just risking, let's say you're risking, what is that? You're risking 15 cents, and where's your target, right? Where would your target be? Your target would be here, right? This previous high. It's because that was the previous what? The previous area of resistance and the previous prior pivot. That would be your target, okay? So who would be willing to risk 15 cents to make $1? It's a lot of money there. And look at these candles, man. That's a lot of buying power. And the stock is beginning to do what? It's beginning to uptrend, okay? So smart crypto traders brought here, risked the 15 cents, right? So they're just willing to give that up. If it was to turn around and go down, then so what, okay? But since it went up higher, they made their profits here. And look, they could have even added there. They could have added on this break of this high today, right? It's because that confirmed uptrend. It busted above this pivot. You had some nice buying power there. So that would have been another area where you could have purchased XRP, right? So if you was analyzing this chart, right, you would have been targeting for the price to break above these prior pivots, these prior areas of resistance, right? And you'll be risking whatever this pivot is. You know, some traders will be willing to risk this whole entire amount, right? It's because they will want to see the confirmed downtrend to go down lower, and of course, you know, everybody in their mall be down buying it downhill, wouldn't you? Wouldn't you want to buy XRP down here too? I know that I would buy XRP. I'm in XRP. I've been in XRP for a while now, but you know, as far as holding it, you know, as far as holding it is concerned, but I took advantage of the opportunity to add here today. Okay, so me looking at this technical analysis, right, from a technical analysis standpoint, if the stock was to fail to make a new high, okay, let's just say tomorrow, Monday or whenever the market opens, if I was trading XRP, all right, or if you're investing XRP, what you want to see is how would the price respond once it gets up here, if it does, because you know this is not the video to say, oh, this is what it's going to do. We all hoping that it gets up here, breaks above this pivot high, right? Find a way to break out, right? And people will begin to buy. What? They'll begin to buy above 2, right? And we'll hope that the price holds above 2, makes another higher high, right? Fell to make a new low, makes another higher high, and then that's when the price will take off, and then that's where you'll see the trend will continue to look like that. A series of higher highs, higher lows, higher highs, failure to make a new high, it broke down and made a new low, okay? So I'm giving y'all this game so you can understand from a technical analysis standpoint, right? That is it too late to buy Ripple right now? I would say so, unless you're willing to risk either this previous area of support right here, this pivot right here, right? Because that can be an area of support, or logically speaking, you will want the area of support to be at $1. So you guys willing to risk 54 cents, 55 for a little slippage? Are you guys willing to risk 55, right? To just make 40? That doesn't make any sense from a trading perspective. That doesn't even fit the right risk parameters. It's because the right risk parameters, as far as risk management is concerned, you would want to make at least a 1-to-1 when the stock is in a confirmed uptrend. You will at least want to risk 1, so your 1 will be what? Your 1 will be 50 cents to make 50 cents, right? So, you know, a little slippage involved in this. You can technically take this here, you know, risk 50 cents, right, and the busted above. But here's the good news for you. Here's the thing where the value comes into play in this video, okay? And this video, man, is free. It's free game for you. So it's free to like the video also, right? When the stock finally breaks above this 2, if it does manage to break this 2, this area is very, very important, because if it breaks this, Lord have mercy, man, there's going to be so many people that's going to buy there, all right? And then be willing to buy here and put their stop loss right underneath there. So they'll be willing to risk 50, and there's nothing in the way, there's no prior area of resistance to stop Ripple. It'll take off and it'll go straight to the moon, right? So you're risking, what is it? You would have been risking 50 cents to make Lord knows how much. So let's say if you would have bought 1,000 shares of Ripple, or 1,000 coins, of Ripple right here, right? You're willing to risk 500 of it to make God knows how much money, because it would have broke out, right? Well, guess what? If Ripple was to manage to get up to, let's say, $4, right? Think about this now. If Ripple was to manage to get up to $4, okay? What's the most logical thing to do in this situation based upon the technical analysis? That's right. You would sell a part of your position to put what you risk back in your pocket and allow Ripple to make free money for you for the rest of your life, right? until it goes to the moon, okay? So that's how you observe technical analysis, from the area of support and resistance. The areas where there's pivots, where there's whole numbers, pivots, those are areas of key levels of support and resistance, okay? And if the stock manages to break through those areas of resistance, right, then that would be your time to buy, as long as it fits your risk parameters. I hope this video helps you guys. It's because if this stock manages to break out, then guess what? I'm going to sell some of my coins. I'll sell some of my position, put that back in my pocket, and then I'll just let the rest run. And guess what? You got yourself a free investment. You took the risk out of the trade. You took the risk out of the investment. And that's how you read a chart. Make sure y'all like, subscribe. Holla back at your boy. It's your boy E when I Only Boxing. Signing on to the next one. Holla at your boy 100. Whoop out.